But the story abroad that we really want to talk about today is the weaker economic data in China. Again, lack of economic recovery, really, in terms of what the bulls were hoping for. Our Eunice Yoon is live from Beijing. Eunice, what did you take away from some of the data today? Because I thought it was interesting that the market rose because the Chinese central bank actually cut rates and is promising stimulus. So what's actually happening in the economy?
Yeah, that's right. Well, in terms of the stimulus, a lot of investors were excited about it. So that's one of the reasons why we saw the rally in the stock markets. However, in terms of the main takeaway here, I think what we are seeing is authorities growing more concerned that the post-zero COVID rebound doesn't look as though it has a whole lot of momentum. The numbers today really reflected that it's unclear as to exactly what is going to propel this economy forward. Retail sales and consumption was supposed to be the big driver where people were going to come out in force and have revenge spending. Well, it looks as though that's not happening. It's moderating quite a bit. Of course, still higher than last year, but that's compared to a year when a lot of people were holed up in their homes because of the pandemic controls. Now, if you look at the industrial output figures, that really reflects that global demand for Chinese products is weakening. The investment figures also disappointed, especially on the private side. Private investment actually contracted. And so that tells us that the private sector isn't really feeling like investing a whole lot. And then the property sector, which is traditionally a major driver in China, well, the imprints there were all lower for the most part. And so that really is of big concern for the policymakers here. And one of the reasons why we did see the central bank move to cut a medium-term lending rate, and why there's all this talk now that we could see more rate cuts to come. One other bit of data, though, Sarah, that was really quite disconcerting was the youth unemployment figure. It hit a fresh record of 20.8%. For May. So that just means that companies in this entire environment are feeling really uncertain, not wanting to hire.
Yeah, Eunice, that was actually what I was going to ask about youth unemployment. But I guess what was perhaps misunderstood then in terms of the expectations of coming out of COVID and the vigor with which people at least expected the economy to sort of reassert itself with that hasn't shown up?
Well, I think the big debate here was exactly how people are going to spend and how wealthy they're going to feel and how quickly things were going to bounce back after the zero COVID lockdowns. There were several people here who thought that, this is going to come back. We've seen it in other countries, such as the United States, where people just wanted to get back to their lives, wanted to get back to business, and that things would be opening up in force. On the other hand, there were 3 years of lost income here. Unlike in the U.S., people were really locked into their homes. They couldn't do a lot of work. If you're, say, somebody who cuts hair for a living, those haircuts that you might have done over the course of 3 years, you weren't really able to do a whole lot of that when you're holed up in your own home. So people are just feeling quite poor. And I think that's what we're seeing here is that people are feeling much more uncertain about the future. And then in that period, of course, there have been all these different regulatory changes. And it just seems like not only just week to week, but sometimes even day to day, you're not exactly sure how these regulations are going to play themselves out. Yeah. And that's another factor in the equation.
Yeah, it's kind of a different mentality there when you're locked up for so long, I guess. Eunice, thank you. Eunice Yoon.